What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 5 surprising dividend stocks. Some of them are good, some of them are bad. I'm going to explain to you why they're bad, and some of them need to really step it up. Some of these are REITs, some of these are dividend stocks, and it's just they got to get over that hump. I'm going to explain to you a few dividend stocks that need to get over that hump and start hiking their dividend more efficiently and more attractively for dividend investors like myself. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these dividend stocks out right now. First dividend stock I'm going to go over is actually a real estate investment trust, Gladstone Land Corporation. They're sitting at $16.43. They're a monthly dividend real estate investment trust. Average volume is 185.51K. Market cap is 586.78 million US dollars. Year range is 1495 to 2745. Huge dip right now. Its day range is 1638 to 1677, and its previous close was 1649. So let's go over these guys real quick. These guys are big with farmland. So they're in some states, Texas, Michigan, California, Oregon, Washington, and they have been expanding. This is one thing that I did have these guys. I sold them. I'm maybe going to consider rebuying these guys. I just like the way that their portfolio is. And again, they focus on farmland. So that's one thing that's very important with these guys is, and I will do a more detailed video on these guys because in the future, but I just wanted to skim over this with this real estate investment trust. I'll jump to the revenue and I'll jump to their dividend history. And these guys are doing a really good job revenue wise. This is annually in millions US dollars, 2016, 17, 2017, 25, 2018, 36, 2019, 40, 2020, 57, 2021, 75, 2022, 89. So there is an opportunity for dividend growth, but I'm going to go over the dividend growth with these guys. This dividend growth is slow and it's terrible. So 2015, okay, these guys were 4 cents. 2016, 4 cents. 2017, 4 cents. 2018, 4 cents. 2019, 4 cents. And they finally hit 5 cents in 2019. 2020, they're still 5 cents. They haven't jumped up at all, or barely at all. The payout ratio is 79% according to Zacks. The dividend increases in the last 5 years is 20. It's so slow. Dividend growth in 5 years is 0.71%. So if you bought 1 share, you made 55 cents with a 3.35% dividend yield. These guys are at a discount right now. This is one I may consider buying. Don't quote me on that, but I really like the potential in the long run with these guys, but the dividend growth is so slow. It's terrible. Let's jump to the next dividend stock. And next is Welltower. If you saw my story that I had or my YouTube shorts, I just skimmed over Welltower. The average volume is 2.35 million. The market cap is 37.82 billion US dollars. Year range is 56.50 to 89.45. Day range is 75.41 to 76.25. And his previous close was 75.76. So these guys are one of the biggest healthcare REITs out there. I'm going to jump to these guys real quick. So on their website, this is the thing. They have a lot of senior housing, post-acute care, and outpatient medical solutions. So this is the one thing. They have state-of-the-art outpatient centers that are being built accessible settings for more consumer friendly. Their portfolio of medical office buildings is an integral part of creating healthcare provider connectivity in markets. Now, office space is one thing, but outpatient medical facilities where physicians pay rent, that's a different story. Acute care is in demand and senior housing is in demand. So all these added into all 3 of these things combined are very attractive. But there's a few things that are a turnoff. Let's jump to the revenue and dividend history. So here's our revenue annually in millions US dollars. 2016, 4,281. 2017, 4,316. 2018, 4,700. 2019, 5,121. 2020, they took a hit because of the pandemic. 4,605. 2021, 4,742. In 2022, the revenue is jumping up to 5,860. So there is an increase in revenue. And as you know, with a real estate investment trust, 90% of what they make go back to investors. Now let's check out their dividend history. So right here, starting in 2018, they were 87 cents. 2020, they did a dividend cut. They have not increased their dividend or hiked their dividend since. Their payout ratio is 72%. Number of dividend increases in the last 5 years is 0. Dividend growth in 5 years is 9.74%. And if you bought one share, you made $244 with a 3.22% dividend yield. Wow, like what a turnoff. Now I'm going to jump to the next dividend stock. This one kind of surprised me. I found this one. I'm going to look at these guys very closely. It's called Paychex, Paychex, and PAYX is a symbol. It has a dividend yield of 3.19%, a PE ratio of 26.92, average volume 2.33 million, market cap is 40.25 billion US dollars. The tier range is 104.09 to 139.47. Day range is 110.31 to 112.03, and its previous close was 110.25. So what do these guys do? So I'm just going to use these guys as a reference with Wikipedia. This is pretty accurate. I did look at their website. It was just so hard to really summarize things, and Wikipedia made it 10 times easier. So they're an American provider of human resource, payroll, and benefits outsourcing services for small to medium-sized businesses. With their headquarters in Rochester, New York, the company has more than 100 offices serving approximately 670,000 payroll clients in the U.S. and Europe. 2019, Paychex ranked in the position 700 in the Fortune 500 list of the largest corporations by revenue. And its company's revenue for the fiscal year in 2020 is projected to exceed $4.1 billion. So let's go over their revenue and dividend history. And this is why I'm closely watching these guys. This is their revenue annually in millions US dollars. 2016, 2,951. 2017, 3,153. 2018, 3,377. 2019, 3,772. 2020, 4,040. 2021, 4,056. And 2022, 4,611. They just hiked their dividend recently, and I'm going to closely watch these guys. So I'm going to jump to their dividend history. So here's them starting in 2009. They were 31 cents, a little stagnant. Then they jumped to 32 cents in 2011, 2012 to 33 cents. And then 2013, 35 cents. 2014, 38 cents. 2015, 42 cents. 2016, 46 cents. 2017, 50 cents. 2018, 56 cents. 2019, 62 cents. 2020, 62 cents. 2021, 66 cents, 2022, 79 cents, and 2023, 89 cents. So their payout ratio right now is 77%. That is a little high, but I'm just closely watching these guys. Number of dividend increases in the last 5 years is 4. Dividend growth in 5 years is 7.49%. If you bought one share, you made $356 with the 3.23% dividend yield. Very closely watching these guys. Let's jump to the next dividend stock. And this is another dividend growth stock that took a little bit of a hit, and they're not doing too strong against the S&P right now. But this is very attractive if you're a dividend investor. They're sitting at 45.29. Dividend yield is 2.21%. PE ratio is 37.60. Average volume 4.97 million. Market cap is 24.22 billion US dollars. Year range is 35.92 to 52.23. Day range is 44.29 to 45.34. And its previous close was 44.39. Now let's check these guys out real quick, revenue wise and dividend history wise. So here's the revenue history from eBay from the get-go. 2000, it was like not even $1 billion. And then 2001, 1.21 billion. 2013, it was 1.79 billion, a little bit of a decline. 8.98 billion to 9.57 billion, 10.75 billion, 10.81 billion, 9.8, and then 9.82 in 2022. So change in revenue it has grown its revenue over time. a little bit down since 2020. 2022 it was down, but so far things are looking better. So this is starting to become very exciting for eBay, and I'm going to closely watch these guys, and I'm going to jump to their dividend history. And this is why I like these guys. 2019, they decided to be a dividend stock. 2019, 14 cents, 2020, 16 cents, 2021, 18 cents, 2022, 22 cents, 2023, 25 cents. That dividend growth in 5 years is 15.56%. If you bought one share, you made $2.25. Number of dividend increases the last 5 years is 5, and the payout ratio is 30%. I'm still, I don't know if I'm going to pull the trigger yet on these guys, but this is very attractive. This is one I'm closely watching. Now I'm going to jump to a very disappointing dividend stock that has not done well with hiking its dividend. And that's Newell Brands, NWL. These guys used to be a pretty good dividend stock, but man, they fell apart. Dividend yield is 3.24%. They're not even showing a PE ratio in Google Finance because it's not looking good. Average volume 8.53 million. The market cap is 3.58 billion US dollars. Year range is 802 to 2155. Day range is 864 to 894. Previous closes 878. Now check out their revenue and dividend history. Look at this revenue. So it was going up and then it's kind of stagnant. 2016 annually 9,181, 2017 11,000, it's getting up there. 2018 10,000, 2019 9,715, 2020 9,385, 2021 10,589. So check this out. This is very disappointing. Annually in millions US dollars, 2016 9,181, 2017 11,170, 2018 10,000. And look at how disappointing this is. This is annually in millions US dollars. 2016 9,181, 2017 11,170, 2018 10,154, 2019 9,715, 2020 9,385, 2021 10,589, 2022 9,459. Now let's jump to the dividend history. Let's start in 2012. It was 10 cents. 2013, 15 cents. 2014, still 15 to 17 cents. 2015, 19 cents. A little stagnant. And then 2017, 23 cents. Stagnant 23 cents. It has not hiked its dividend, and they cut their dividend in 2023, which hurts. Payout ratio is 77%. Number of dividend increases in the last 5 years is 0. Dividend growth in 5 years, not available. That hurts. Dividend yield, you bought one share, you made 28 cents with a 3.19% dividend yield. That hurts. That really hurts. So I just wanted to, a lot of these just crossed my mind. I really wanted to show you guys these dividend stocks. Some of them are disappointing, and some of them are like, ooh, looks really good. eBay looks pretty hot right now. So I'm not giving financial advice. I'm going to jump to my disclaimer. I hope you guys have a great Tuesday. Take care. So as a reminder, this is a disclaimer notice. This is not financial advice for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing, and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video, and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.